All right. Hey, everyone. Mark here. Mark P. Markets. Thank you for joining me for another Bitcoin video analysis session. Hopefully you hear my microphone nice and clear. So I know I'm running behind. Again, I apologize. Steen, I have to take your advice on this. Okay, what is this telling me? Hold on, I'm seeing an error. All right. So TradingView may not be able to see me here. I don't know why, but okay. Anyway, as long as you guys could see me here on YouTube. All right. So like I said, I'm running behind. I apologize for that. So let's get this thing started quickly. Here's what I want to go over in this stream. All right. First, we're going to talk about the economic calendar as we usually do. Then we're going to talk about this Bitcoin situation. I mean, the title of today's video is how to use Bitcoin to gauge risks and opportunities in the altcoins, using intramarket analysis, basically. So I want to touch on that because a lot of people don't seem to understand how that works. So we're going to go over that. And then we're going to talk about the trade scanner a bit and how it shines in these type of situations, okay? It's an unusual situation, right? We got to talk about it so that you have the right expectations. All right, let me see here. Okay. All right, so I guess TradingView people, I guess you can't see me over there. All right, well, if you can, just refresh the browser if you can, whatever. I don't know if you guys can even, I don't even know if I don't think I'm streaming over there. It's telling me that I'm not. All right, anyway. Okay, let's continue. So let's get this thing started. All right, let me pull the stream up here. Let me pull this up. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, next. Let's get into the economic calendar. Hold on. Let me pull this up. Is anyone on? There's nothing on TradingView. All right, maybe it's them because I know I set everything up. And see, that's what I mean. I spend all this time. I set it up, and then it doesn't work. It may be something with their server. I don't know, but I'm not going to be able to go through that now. So anyway, you guys can see me here. So let's continue with this. Let me take this slide off, and then we will continue. All right. So first things first, let's take a look at the economic calendar. And by the way, real quick, let me just say hello to my people, right? We got Steen, we got Alice. Good to see you. Chris, all right. Good to see you guys. Also, if you're new to the stream, if you want to share what city or what country you are from, you're located in, it's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. All right, now, first thing I want to go over here is the economic calendar. Now, before I mention that real quick, one other thing. If you don't have a exchange or if you're looking for a new exchange, consider the links that we have in the description here. You can see the links in my description. These are affiliate links, and Steen gets a small commission every time you place a trade. So obviously you have to fund the account, right? And you have to place trades, but it goes a long way for supporting our community. His work has been invaluable, all right? We have a great, nicely developed trade scanner that documents everything. If you go to the website, again, all the links are in the description. We have a nice results pages, so you can see everything that the trade scanner does. It has dates, it has times, and you see the P&Ls, okay? No other signal provider provides this type of transparency, right? In fact, they don't even provide their real names half the time. They usually have these anonymous websites, which I can't believe people actually give them money. Anyway, I'm not going to get into one of those rants right now. So just wanted to mention that if you haven't seen my new website, it's marketsignalspro.com, and you can sign up for Trade of the Week there. It's a free signal that the robot sends out. The trade scanner sends it out every week, okay? And this asset class rotates each week. So the week before we had a stock. So this week we're expecting a Forex pair. So when a Forex signal goes off, all the people on that list will get a Forex signal. And then next week it starts over again, and we'll begin with, it'll look for a coin, Bitcoin, altcoin. It looks for the top 10 coins, right? And it'll send out one of those. Those signals are the same signals that premium members get. The thing is, we only share one, where the trade scanner sends out multiple signals during the week across these asset classes, okay? So it depends on what you're interested. Also have a package for all of them. Anyway, I'm not here to do sales. So let's get into this economic calendar, shall we? So this week, we have a couple of things that are worth mentioning. We have today, I believe at 7 p.m., 8 p.m. Eastern time, something like that. We have the Bank of Australia, right? They have their rate statement, which again is usually not a big market mover, but if you're in some sort of Aussie pair or Aussie cross, it could have an effect. So you want to be aware of it. Tomorrow we have Bank of Canada, right? Tomorrow is December 5th. We have the Bank of Canada. We have their rate announcement. All right. So you want to be aware of it if you have any of those Forex pairs. Then moving on to what I think it was Wednesday. No, I'm sorry. I got it mixed up. Tomorrow's ISM manufacturing. I believe there's a manufacturing number, not a big number, not a big mover. It's Wednesday that has, I believe, is the Bank of Canada, the rate announcement. Not like I said, not a big market mover, right? And then Friday is really the key one, and that is non-farm payrolls. Non-farm payrolls is usually the first Friday of every month, but I guess this, because of the holiday and stuff like that, they shifted over a week. I don't know why they do it, but anyway, it's this Friday. So you want to be aware of these numbers, not for trade opportunities, but instead to mitigate risk. So if you're taking trades into these numbers, you want to be aware, all right, that these can come out. Now, non-farm payrolls, if there are any surprises in that number, you can see a dramatic effect across all the markets, right? It can affect the dollar and everything else. So you want to be careful going into the number. Perhaps you don't take a lot of trades into the number. Perhaps you get flat into the number. Perhaps you take profits off of something you have going into the number. Now, this has nothing to do with investing. This has everything to do with day trades and swing trades, all right? My stream, this is oriented toward day trades and swing trades. All right. So let me just refresh this over here. Okay, yeah, I don't understand that TradingView situation at all. Okay. All right, so anyway, so now that's the economic calendar. Let me know if you guys have any questions about that. Okay, cool. So, hey, M from Turkey, and then we got, I'm sorry, I can't pronounce, I have a hard time seeing the text. Igbakwi from Nigeria. All right, cool. Good to see you all. All right. So now let's make this chart bigger, shall we? And let's talk about the situation going on. By the way, I wrote a TradingView article yesterday, and I haven't looked at the numbers yet, but I suspect that not too many people have read the article. All right, because usually I see some kind of numbers somewhere else. Man, no one reads these articles. I don't even know why I write them. But anyway, in that article, I explained sort of this situation, right, in Bitcoin. Now, you should read those articles if you don't. Here's the thing. In that article, I explained that this scenario right here, see that illustration on the chart? I pointed that out. And I talked about how I looked at that as the favorable outcome, or the more favored outcome based on the location, right? So this location, before I talk about the altcoin comparison, this location right here, 38K to 40K, that is a notable resistance area, right? And price was lingering inside of this minor resistance, which I talked about, which is 38K. And when price lingers, I even put out a video on Thursday in the channel, in the Discord community. By the way, there's a free membership there. It's in the links in the description. If you're not a member of the Discord community, check that out. I put a market update in the free channel about the lingering price action. Okay. And I said that typically is a sign of strength. A lot of people ignore it, especially people that work on smaller time frames, and they start shorting this thing. Usually in these situations, a lot of short signals will appear in these areas. Okay. They're usually very plentiful. And that's not a good sign. If you keep seeing short signal after short signal and they're not following through, that means people are getting short and they get squeezed. Okay. So I don't care about the news. There's some news coming out, blah, blah, blah. This right here, it looks great after the fact, but this is higher risk now for longs. Okay. It's even higher risk. If you're not in this thing and you're chasing it, you're going to run into problems. Now, understand that when I arrive at my scenarios, I'm considering this over hundreds of trades, right? What I mean is I'm looking at this type of scenario. If you look at this over hundreds of trades, not one, but hundreds, typically the market is more likely to pull back in these situations, not squeeze through like this. So this is an unusual situation. My point here to you is this: don't get caught up in this nonsense. Don't get caught up in all the fraud talk about how the market's just getting started. It's going to be at 50K by next week. All that nonsense. Do not get caught up in that. That's all just emotional appeal to get you to give them attention so that they can monetize it. Do not pay attention to it, please, for your own benefit. All right. Look at levels and assign probabilities. Right. That's the best way to go about this. If you're not in this, then you've missed it. Don't chase it. If you are in this, then it doesn't hurt to take profits off the table when it's going vertical like this, because this is moron time, to be honest with you. This is when all of the ignorant, all of the uneducated, all of the people who just go by intuition and feeling, this is when it looks good. Oh, the market's strong. And then they watch their fake guru. Oh, it's just getting started. I'm going to buy now, right? And it's the worst time to buy in terms of probability. Again, I'm talking about swing trades. I'm talking about day trades, right? Even investing too is a horrible area. In fact, we'll look at this on a weekly chart and I'll show you why in a minute. But my point is this. If you're going to deal with this right here, the best way to deal with this are day trades only. Okay. Can anyone tell me why? Real quick. Let's see who's listening here. Can anyone tell me why are day trades the best technique to deal with this if you must get involved? Anyone want to tell me? We used to get a notification for, oh, thanks, Alice. That's probably, that's probably TradingView. They have this thing with their picks. Here's another thing I suspect about them. They have these picks, right? And they're driving all the traffic to all the picks. So when anyone else writes something, no traffic goes there, right? So I don't know. It's not a very good incentive for someone like me. But whatever. I don't know how they run their business. So the point is, why are day trades? Why would day trades be a better choice here? Anyone want to share their thoughts? I'm not going to pick on you. You can add, even if it's not what I'm expecting. Don't worry. This is why we learn. This is how we learn, right? You say something that may be incorrect or not what I'm looking for, and then that's how we learn. Why day trades in this area? Why not swing trades? Why day trades? And why? I want to see an answer to that question. Anyone? I'll wait a minute. Anyone? So Bitcoin is luring people that do not know the detail. Stacy says low expectations. Okay. Those are good answers, but that's not the answer I'm looking for. Because of the level, Alice says. Well, yes, that's correct. Because of the level. This is not attractive for swing trades or investing, right? So day trades allow you to take smaller risk if you respect the stop loss, right? The whole point is the stop loss is smaller. Forget the profit, right? Everyone, I want to be rich, right? Forget the profit. It's the stop loss, right? The defense that protects you. And that's actually where money comes from over the long term in this game. So if you have a smaller stop loss and you buy the top, because at some point, this thing is going to put in a top. All right. Thing is, we don't know at what point. And it may be now, it may be in a few days. Who knows, right? This thing may touch 45K. It has opened the door to 45K. It has done that through this move because it cleared through this resistance. That's a pretty clear break, right? So 45K is a possibility, but who knows where it's going to put in that peak? It may be now, so it's a gamble, right? By putting on day trades, if you're wrong, you take a small loss, 200 points, 300 points, whatever, right? That's relatively small compared to a swing trade, which could be thousands of points. At the same time, your profit expectation should also be smaller because it's relative. If you put on a day trade and you risk 200 points, but you expect 1,500 point profit, you're being unrealistic and you open yourself up to more risk because the chance of it running another 1,500 points, while there's a chance, it's a smaller chance. If you take that trade 100 times, most likely you will be unprofitable, right? That is how you have to look at that. It's like a poker game. If you don't know poker, learn poker, because these trade situations are extremely similar, right? People don't look at that comparison because poker, the skill in poker is about bluffing. Yes, you can't bluff the markets, but there is a statistical relationship. Like they do share, the markets and poker do share a commonality when it comes to measuring statistical outcomes, right? When you have poker, you're looking at the cards that the dealer gives you, and now you have to deal with statistical outcomes. Some cards are better than others, and they're going to increase your chances of winning compared to other cards, right? Based on what you have, based on what's on the table, right? Because you don't know what anyone else has. So the markets are similar in that sense, where based on a situation, right, there's going to be a probability on certain outcomes. In this situation, right, when it clears a resistance like that, yes, it opens the possibility for 45K, but also there's a very high risk of retrace. The higher this thing goes and the greater it looks, the riskier it is for longs. While at the same time, it's bad for shorts. This is risky for shorts. And I've been warning about that. All back in here, I said, be careful with the shorts. Counter trend trades are lower probability to begin with. There's no argument that the trend is bullish here. Okay, it's been bullish going back to like October or whatever, a few months here. This structure is bullish, higher lows and higher highs. No argument there. So shorts should be expected not to perform well to begin with, right? So if you're a more conservative trader, you don't even bother with shorts in these situations because it can only get you into trouble. And if you do, you have to be very, very careful with them. Anyway, so there are situations like this where both sides have a very high degree of risk, longs and shorts, right? So before I talk about the altcoins, I just want to mention that this scenario, okay, the squiggle that I drew, the illustration on my chart, this little over here, this was the favorite scenario that I was anticipating over the coming week. Clearly, the market doesn't agree, okay? So this is pretty much irrelevant now. But if the market were to deliver this scenario, that's the higher probability scenario for longs, swing trade longs in particular, because now this old resistance is a new support. So that's still the case. This zone now can be considered a support zone, right? Rather than a resistance zone, because it's been cleared. And there are probably a lot of shorts sitting in here hoping the market pulls back so that they can get out. That's what makes it a support level. Does that make sense? So now, if that's clear, let me see what Nicholas is saying. It is sufficient to put buy order with trailing stop and let it try to follow the rise. It's not a good idea because you're taking the most risk. Here's the thing. This is all about human perception. You look at this and, oh man, this thing looks great, right? And then on top of that, everyone is telling you that it's great and the market's rallying and the market's strong and whatever, right? So you hear all this positivity. So you think it's going to continue, but you don't see what's not visible here. You don't see all the sell orders sitting in this area. You don't see them. If you were able to see them, you might think otherwise, right? And say, well, how do I know about them? I don't, but I'm suspecting that they're there because this is a general resistance area. We're moving up into these resistance areas where sell orders often cluster. That's usually where they are. Right? So the further this thing goes, the harder it is going to be to continue higher. You have to see it that way. Just like, and let me tell you this, if Bitcoin were to pull back, right, some negative, whatever, some news comes out, throws everyone off, and Bitcoin's over here, let's just say, okay? But let's say Bitcoin pulls back to here. Right now, all of you, oh man, if it went back there, I would borrow money and I would buy Bitcoin because that's a great price. Not if it pulled back there. Because there would be some negative news. Oh, let me wait. Even though that's a great price, of course we can say that now. Well, let me wait because I don't know, it doesn't look good anymore. There's all this negative news. Oh, the SEC is doing something. I'm gonna wait. Right? It's all about your perception. You have to get all of that out of your system. All right. Stop being obvious. Take your Captain Obvious hats off. All right. So my point now, so that's the point that I wanted to make about this price action and why you need to be so aware of the location. Like I said, this market, it's not about forecasting. Everyone thinks it's about telling the future, right? And all these fake gurus play on your ignorance they pretend that they know the future in some way, right? With some kind of gimmick. There is no way to know. Markets are mostly random because unless you know the news coming out next week, we don't know where the market's going to be. And all these clowns who claim, oh, I called this back in August. I said it was going to go to 45K and look, it's almost there. The market just coincidentally happened to work out. Okay, so keep that in mind. Now, what I have to say is you have to pay more attention to the levels and you have to pay attention to the structure. And then based on that information, you can make adjustments to your expectations and manage your risk. That is what this is about, constantly adjusting expectations. Like I said, I was anticipating the pullback. The market says no pullback. Okay, no problem. I adjust. This scenario is now meaningless. So now I have to figure out a new scenario. Eventually, the market's going to pull back. And I do not want to get caught at the top of that. So when I see these situations, it's like, okay, for me, no longs. I'm not interested in longs. I'm only interested in longs at certain levels. And if we don't go back to those levels, I have nothing to do. I'm not going to short this. I don't short Bitcoin to begin with. The trade scanner calls shorts, but I don't short Bitcoin. So there's really not much for me to do here. If I'm going to day trade, I'm not going to short Bitcoin anyway. There's plenty of other things to short that are a lot easier to deal with. So if I'm going to day trade, I'm looking for small pullbacks on smaller time frames, right? And I'm using the same ideas just on smaller time frames. So that's my point with this. And yeah, so a lot of people will be waiting. Hey, Alex, I remember 15K. No one wanted to buy Bitcoin. Right, Alex. And now if it goes back there, oh yeah, I'll buy it in 2 seconds. Right. Everyone was saying Bitcoin was going to 5K. That's human nature. Understand that a chart is really nothing more than a graphical representation of human behavior, okay, in a lot of ways. But there's also a lot of things going on behind the scenes that we don't consider. We only take for granted what we see with our eyes. Oh, I see this. But we don't really see the reality of what's going on here. We only see historical information. As a technical analyst, I have no choice but to use historical information to try to anticipate what is likely to happen next. So I have to use historical information to assign probabilities to the future, but only the near future, right? I can't forecast 3 months out with any degree of accuracy. There's no way. So understand that this is a highly random game. And anyone that tells you otherwise is lying to you and most likely trying to sell you training. Please, this game is wrought with deception, especially on YouTube and all these channels. Please put that through your head. Okay, now, so that's my argument about this situation here. I want to talk about the altcoin comparison, and then I want to talk about the wave count, because in situations like this is where the wave count can be relevant. I often don't talk about the wave counts. I teach it. We talk about wave counts in my training program, but it's usually secondary. In situations like this, it can really give you a heads up as to where you are in reality. We'll take a look at that in a moment, right? So I want to talk about altcoins. So when Bitcoin has a move like this, right, understand Bitcoin is like the S&P, right? Speaking of the S&P, let's just take a look at it real quick, right? I know the S&P is negative today, which is funny. S&P pulled back slightly, but that's nothing, right? What is that, 29 points? I mean, that's kind of big for the S&P, but that's really, in the bigger picture, as you can see here on this daily chart, it's a blip. It doesn't really mean anything. It's coming off of a resistance, right? Whatever. My point is, the S&P is the leader of the stock market, and yet the NASDAQ is up there with it, right? NASDAQ 100, okay? And these things move together, okay? And NASDAQ's a little weaker. You see that? But this is really nothing. This is like a minor pullback. My point is, these are the leaders. So when these things are pulling back, that means there's weakness in the market in general, right? So when we have a situation with Bitcoin where Bitcoin, is going higher or lower in some dramatic way, this is the leader of the coins. So what that means is whatever this does, the others are going to follow. Also, when this is at certain levels, this is where it becomes very important to compare this to an altcoin. So let's take a look at an altcoin here. Let's pull up something like XRP. right? This is one. I mean, my trade scanner calls the top 10 five coins. I'm sorry, the top 10 coins, right, by capitalization, the top 10 capitalized coins. That's what the trade scanner is programmed to look at. I'm going to add more coins soon, so it has more of a range of things to look at. But right now, that's all it looks at, right? It doesn't look at some garbage coin that's like worth nothing that has a pop. It doesn't look at garbage coins, like real garbage. All altcoins, I believe, are garbage, but the real, I'm talking, you know what I'm talking about, the real garbage ones. Anyway, so here's something like XRP, right? This is the one that the trade scanner calls. Now, when you have a situation with Bitcoin, right? Like now let's do a comparison. What I'm going to show you here is called relative strength. This is one of the first lessons I learned as a trader when I started out in this game. And it still applies today, and it applies to these markets. No one looks at this. A lot of these, I don't see one fake guru talking about this, right? So we saw where Bitcoin was, right? Now look at something like XRP. That is not exactly impressive. So that is something that I would consider relatively weak. I mean, look, we don't even have a break of the 50% line. This is the 50% line of that move. We don't even have a break of that. All we have here historically is what? We have a higher low, okay, here. So that's a somewhat of a bullish sign. But with a move like this on Bitcoin, shouldn't XRP be looking something like that? So when you see something like this, right, that's a sign of weakness, which means if Bitcoin pulls back over the next couple of weeks, this thing is more likely to get hammered, because it means that no one is buying this thing right now when the leader is being bought. All right, but this may not be the best example. Let's look at another one. Let's look at like Litecoin. What's going on with Litecoin, right? Now look at Litecoin. Same situation. So they had this attempt, okay? Look, that's a bearish pin bar. Talk about relative weakness, okay? Litecoin should be pushing resistance, should it not? Bitcoin broke 40K. Bitcoin is trying to get up to 45K, and that's the best that this can do. On top of that, it produced a three-legged correction in here, right? 1, 2, 3. See that? See that three-legged structure? Those are typically corrective structures. Those are not trend structures, right? Those are not impulse structures. So when you see something like this and you're thinking about buying an altcoin, think again, because if Bitcoin pulls back, these are they're all in position to get hammered. That's called relative weakness. Now, there are times when you can have the opposite situation where, Bitcoin is pulling back and the altcoins refuse to pull back, right? Like if Bitcoin was breaking 30K, for example, was going lower, breaking 30K, and then something like this got stuck right over here and refused to break while Bitcoin was pushing a new low, that's called relative strength, right? That means Litecoin is acting stronger than Bitcoin. And if Bitcoin turns, which is the leader, then this is likely to be bought first. This relationship that I'm describing is very common with stocks and the S&P, right? If you see a weak stock, but the S&P is strong, that means when the S&P turns, that weak stock is probably a good one to short. That's the typical thought process. Of course, there's more that goes into that in terms of analysis, but that's the general idea. You don't want to be buying a weak stock when the S&P is strong, right? And you don't want to be selling a weak stock when the S&P is weak. Does that make sense? Did I say that right? Well, if the S&P is weak, you don't want to be selling a stock that's sitting at support that refuses to break because it's acting strong, right? Relative to the leader. All right, let's take a look at another altcoin. How about, let's see, what's another one we can take a look at? How about DOT, right? This is another one the trade scanner calls. Now look at DOT. All right, Bitcoin has been strong. DOT has made an interesting attempt, very similar to the other altcoins, right? Still not taking out the resistance. So although the chart looks a little bit better compared to Litecoin, compared to XRP, this is still not that great. This should be here relative to what Bitcoin is doing, right? So the whole point of this, I don't have a way of mathematically measuring this correlation. I'm sure there's a way to do that, but I don't do that, right? The point is not to be exact here. The point is to get an idea so that you have some sort of, Bitcoin strong, this thing not so strong. So now you have you have like a red flag to keep in mind. So where is this helpful? If the trade scanner is calling longs, like in something like this, because the trade scanner is looking at smaller time frames, right? And the trade scanner is getting long everything. It's longing, XRP, it's long Ethereum, it's long this, it's long that. And Bitcoin is working its way up to a resistance. Be careful with those longs. Now you know, like, this thing is relatively weak. It's calling long. Everything is long. I should perhaps go smaller. I should avoid these until we get some type of pullback first. And then I should go long, right? Now, it's possible, since the trade scanner looks for momentum continuation, it's very possible to get momentum continuation on smaller time frames in these areas, right? So, and that's where the trade scanner can be a good thing. Let's go to like a 4-hour chart, right? The trade scanner could be a good thing in these situations because it has no bias. Like where I'll sit there and I'll give you a warning, the trade scanner doesn't have a warning. It just says, I see momentum continuation. It's a long, okay? And you may see that in these situations here, okay? Like it'll look like something like this, or perhaps you'll see something like developing like this, and it'll call it a long. So just understand when you see that, look at your location. And based on that location, it doesn't mean you have to avoid these all the time. There are other adjustments you could make. You can trade a smaller position, for example, right? But my point here is when Bitcoin is at a major level, right, or does something ridiculous like it's doing here, let me go to the daily chart, okay, and it's vertical like this, and the altcoins are struggling along, please use that information to your advantage. Don't ignore that like everyone else, okay? And it will at least help you shape your expectations properly, because that's the first step to an effective decision-making process. You have to have the expectations in place, and then you can build around that, whether, it's how you're going to take your risk, what type of profit expectation to have, right? And all that kind of stuff. Even if you're dealing with the trade scanner, which gives you all of that, tells you where to put the stop, tells you where to put the take profit, at least you can gauge, this is a high probability or a low probability situation, right? You can better gauge that. And if you can gauge that, you can then better determine your size. Because right now, the trade scanner does not tell you what size to trade. You have to know that yourself relative to your account. I'll do some more training and education on that, but right now, that's the way it is. Okay, so are we clear on that? Does the relative strength component make sense as far as Bitcoin being the leader and then comparing it to altcoin movements? Does that make sense to you guys? Let's take a look at something like Link, right? Now, here's a coin that the trade scanner doesn't look at. Something like Link, right? Look, they're all the same. All stuck at resistance, right? Another one. It's a good-looking chart. Don't get me wrong, right? Nice bullish chart, nice high or low right there. But what's up with this, right? Why is it acting relatively weak right now, right? What's another one? Uniswap, right? USD. Look at this. Right? Again, gets everyone all excited on some nonsense news or whatever. I think that was the Binance news, and gets stuck at resistance. So as you can see, going back and identifying these levels is more valuable than reacting to nonsense news, which is what most people do. Okay. Your goal in this game is to protect your capital first, right? Play a strong defense, and then learn to recognize the mistakes of others. That's where profit comes from. Those are called, I like to call them soft inefficiencies, right? They're not hard inefficiencies because they're not something that's programmed into the system. Like, for example, in market microstructure, there are certain things that technology is responsible for. And sometimes as a result of the technology, inefficiencies arise. But they're very hard. Like the retail trader usually can't play that game. You can't even see them. That's usually the game of the algos, right? But there are soft inefficiencies, which are the mistakes of people. Now understand that these days, people are a minority in the markets, okay? It's mostly bots, especially in this game. We were just looking at something the other day, right? Me and Stian, we were looking at some stuff with exchanges, and he found this thing where you can actually, if you have enough money, you can buy an order book. Imagine that for a moment. You can buy an order book. Now, most people will be like, oh, who cares? So what? I can see the order book on Coinbase for free. I don't need to buy an order book. They see the real order book. You see the fake one. Okay. So the point is, in the stock world, only market makers have that type of information, and they're supposed to be regulated and stuff. In the Bitcoin world, someone can buy it, and there's no regulation. So someone has a big advantage over you at all times in this game. Something to keep in mind. Okay. So anyway, yeah. So that's the altcoin Bitcoin relationship and how to use that when it comes to gauging the profitability or the potential of trades you're taking. Now, again, I'm talking on the swing trade and day trade time frame. Let's talk about the bigger picture here for a moment, right? I want to point something out before I wrap this up, and that's the wave count. Has anyone done wave counts on the weekly chart? Let's go to the weekly chart real quick. Okay. You need to see this. So this is the weekly chart of Bitcoin, right? See that? Let me make it a little bit bigger so you guys can see. This is the weekly chart. Now, the bottom of this move, the bottom dates back to December of 22, right? A year ago. Look, this is the bottom of the move back here. Okay. Look at that. What price was this around? This was that move to 15K, right? The 15K test that Alex was just referring to before. That's the bottom of this move. Okay. Now, in this situation, looking at the weekly chart, I can count 5 waves, right? Or actually, I can count 3 waves. Look, this is wave 1. This is a little mini wave 1, 2, 3, 4, 5, right? This section right here is wave 1. Actually, I'll highlight the whole section. This right here, this entire section, that's wave 1. Okay. Wave 2, typically corrective move. Here's wave 2. This double top situation and double bottom, that's wave 2. That qualifies as a wave 2. We are currently in what? A wave 3. Wave 3s are typically very dramatic. They're usually never the smallest wave. So far, this is not the smallest wave. This looks like about the same length as wave 1. Inside of this wave, starting over here, okay, to where we are now, I can count 1. Here's a little mini wave 2. This is a gigantic wave 3, right? This is a 4. You can't even see it. Let me see here. This little section right here, we can probably call this a wave 4 right there, that little section, which means we're in a 5 of a 3. And if I don't want to count that wave 4 section, that means we still have to pull back. Either way, if we're in a 5, or if this is a 3 of a 3 or whatever, right? A 5 of a 3 of a 3, it starts to get confusing. Either way, we're looking at a high potential pullback, all right, on the weekly time frame. So it looks beautiful right now. And if this is truly a 5 of a 3, it could extend further. Maybe we see one more leg into 45K. 45K would be a great resistance area, okay, for such an event. We go back a bit here, right? 45K is not a random number that I just came up with out of nowhere. Look what it is relevant to. This is 45K. Okay, see this? Look at this, right? Look at all this price action over here. Look at all this touching over here. See that? That's relevant. That means people are caught. There are people stuck in those positions, right? Longs. So they're going to be more than happy to unload on you when you're buying at 45K or whoever buys there. It's going to break them even. That's the phenomenon. Does that make sense? So even if I'm wrong about this count, right, and I'm saying that this is a 3, a top of a 3, and I'm saying that there are 5 waves in this 3, even if I'm wrong about that, and there are only 3 waves in this wave 3, and we're going to get a little mini wave 4, right, and then one more wave up to wave 5 up into here, we still have a greater potential for that next corrective structure, right? The broader wave 4. And the broader wave 4 can take you back basically to here. Okay, that puts you at what, like the 32 to 30K even. And now that's something that could potentially unfold over the next few months. That's not like a couple of days type of thing, right? It usually starts with some news, some nonsense, some surprise no one was expecting, and next thing you know, we're working our way back, and everyone's getting long into that, not realizing we're in a corrective structure. Does that make sense? Anyone have any questions about that? Do you guys agree? You don't agree? Tell me now, because that's what I'm seeing there. And when I see stuff like that, that means the risk is greatest for longs, particularly for investors who mindlessly buy into these situations because they're too busy listening to frauds who mislead them. Okay? Please understand that. I know I sound bearish a lot of the time, right? And I sound pessimistic, but it's because we don't pull back. And I'm always going to be less optimistic at highs, and I'm going to be more optimistic at lows, because that's what I've learned over the 20 plus years that I've been in this game, right? Because I've seen that over and over. And then you have these situations that screw everyone over, or they blind everyone because we never get a real pullback. Okay. So the market doesn't have to pull back because we want it to. It will pull back when it wants to pull back. And at some point it will. Markets don't move in straight lines. All right. Does that make sense? You guys can still hear me? I don't see anything in the chat. Let me know. Yes? No? Let me go back to, let me read through these chats here. Okay. Oh, maybe I need to refresh the chat. How about that? Because I'm not seeing anything. Hold on. I'm gonna refresh this. No, but if I do, I may get knocked out of here. Okay, there you are. Okay, cool. All right. Yeah, with this web stuff here, I don't want to get knocked out of the chat, especially after this trading view thing. That bothers me. All right. Anyway, so you guys clear on that? So that's a pretty important thing to keep in mind. Okay, cool. So I just want to make sure that everything is working here. So any questions about this? All right, one more thing I want to go over. I want to just take a quick look at the bond market. I want to point something out with the bonds, right? This is the bond market, okay? See this green candle right here? This green candle? Oh, yeah, bonds are breaking out. No, that's every 3 months. These are the bond futures, right? So every 3 months there's a contract rollover, and usually the front month contract it's usually like a higher value than the current month contract. And when they roll over, you see basically like a gap in the price. So that's all that is. Don't get excited about that. That's meaningless. It's not a real movement. So rates aren't really improving exactly, right? We're at a resistance in the bond market. So if these bonds put together a more significant pullback, that can be telling for the future, right? That's what you have to keep an eye on. Notice bonds have come off, right? They put this rally together temporarily, and that's relieved some pressure. And I believe the stock market priced this in very early, right? That's why you see S&P and NASDAQ looking so vertical over the previous few weeks. We have to see what this bond market does, right? Again, this is all based on people's perceptions of the future. And if the Federal Reserve hints at certain things, people price in 6 months ahead. And if something changes, then the chart has to correct, right? Because that was not priced in initially. Okay, cool. All right, you guys. So any questions from any of my student people? If you haven't seen the new website, again, check the links in the description. Also, press the like button, press the subscribe button if you can. It helps me out with the channel. We always have new things on the way. We have a lot of value that we are working on to deliver to especially the members. We have a lot going on here. Okay. Right now we're working on a thing where I can share notes basically on the signals that come out, so that, for example, I can add context for certain things that you may lack. Right. So we're working on that, so I can produce that in a very timely way and in a consistent way. And that's going to add a lot of value to just having the signals alone. All right. Again, when you're working with the signals, it's good to kind of see where you are on the bigger picture so you can gauge their probability. Not all signals are created equal. Some are higher risk, some are lower risk, and it's really a function of the location. All right. So again, check that out, marketsignalspro.com. Check out the performance. There's a results page, and you can see it's not all green. There are red trades in there, red trades all the time. That's going to happen. Okay. But I'm willing to bet that the robot will beat you over time, because the robot doesn't have the baggage that you have, right? Or I have. The robot just does its thing, and it doesn't change its plan. It just does its thing. It follows instructions. It reports results. That's it. So that really takes a lot off of your learning curve. When you have, especially if you're new, you basically get to operate like you have 10 years of experience, even though you don't if you're following the bot, because the bot has a system that does pretty well. You can see the results yourself if you look at the results page, and it's giving you the stop loss and take profit in advance. Okay. So, again, you could check out, that's all on marketsignalspro.com. Check that out. All right. Other than that, thank you guys for taking the time with me here today. If you have any questions, you can also, you know where to find me. All right. Check out the community. Go there. There's a free area. You can send me messages. If I ever send you a message, it's probably a fake. So ignore that. I don't send out messages. So you send me one. You can also send me an email, and I'll be happy to respond to your questions. Okay, cool. So, oh, is that Bill? Wow. I haven't seen you in a long. Good to see you, man. All right, cool. Well, guys, so anyway, again, thank you all for taking the time with me here today. If you have any questions, like I said, you know where to find me. Bill, what do you have to say? What do you have to say for yourself? Where you been? I haven't seen this guy in forever. How you been? All right. So, like I was saying, people, I'm just looking at the text here. All right. Anything? You have anything to say? I guess not. All right, people. Good. Thanks for watching. Enjoy the rest of your day, the rest of your evening, where you're in the world. Oh, all right, cool. Well, you know where to find me. Send me an email or something. All right, everyone. So enjoy the rest of your day, the rest of your evening, wherever you're in the world. And thank you very much for watching.